guys, and welcome to this week's edition of our weekly forecast. And it's been a couple of weeks now since I released one of these weekly forecast videos, and the reason for that is because I had already done an analysis which was gonna cater for like 2 to 3 weeks, and you'd have been following that analysis in your trading. So the main consensus to that analysis was a weaker dollar since June, July, and August, and part of September. So that forecast was expecting a weaker dollar, and up to now I haven't changed that notion of a weaker dollar as we head into the elections. And for those who follow the forecast videos, you know that I've been mentioning that expect a new law to be formed either in August or September. We had a law formed in August, but then priced when it closed on monthly. September, we have seen another law, and that law is coming in at this price point here. So that's the law of September. So what we're gonna do today is we're going to break down the dollar index. We're gonna break it down so that we know how we are going to be trading this asset as we head into the November elections, and probably post the peak of COVID. So yeah, I'm just gonna illustrate what I think the dollar is gonna do, and how it's gonna affect the other assets that we trade: Euro USD, USD JPY, Euro GBP, and the other assets. So when we look at dollar index right now, we've got the new futures contract now, which opened last week. I think last week Tuesday. Previous July contract expired, so we're now into the September contract. When we look at dollar index from a higher time frame view, like I'm on a monthly now, guys. So from the monthly chart, you can see we've got this candle here, this down close candle, in relation to our current price action. Does it have any significance? You see, that's what you need to ask yourself. Is there any significance to market structure on this last down candle? Already we have traded to this down candle here, which acts as our bullish order block. We've already seen some strong rejections from this candle here. This one here, this is the candle that I'm talking about. We've already seen some rejections from that candle. But when we look at price action, the current month in relation to this down close candle here, so I'm going to mark its high, and its high is coming in at 90.88. right? So we've got the high of that candle coming in at 90.88. You see later on why it's important to have that level marked. You're gonna see. So we've got our high of what is this month here? That's March 2018. The high of March 2018. Then we also need to highlight the current September low, the low of our current month, coming in at 91.725. this low here, 91,725. Right, now you can clearly see the reason why I'm saying you need to take note of the high of that last down close candle. It's because of this here. Let me highlight for you. It's because of this area here. Price hasn't traded back into this area, yet we had buy side liquidity being offered April 2018, June 2018. We had the buy side liquidity of market being offered. Now we have seen the sell side being offered, right? And we've got this gap here, right? We've got this gap here, and if you're in the mentorship, you know what that gap means, right? That's our FVG, our fair value gap. So we would expect price to be drawn into this area to close the gap and rebalance the liquidity. So we have seen a rejection to the upside, which was bound to happen because of this price point here. This is our last down close candle. That is a bullish order block. So you would say you can expect dollar to at least show some appreciation from the current price points. But when you look at this price action here, right? When you look at that price action, what else do you see from the September and the August price action? Is the market showing willingness to trade higher or to trade lower, right? You need to be asking yourself this type of question as a trader, because the decision that you're going to make here is going to help you in making a decision to trade the other assets. And if that decision is not correct, if you see what you are your analysis that you are doing does not make sense, then you might need to step aside, right? So when we look at the current price action, the past 2-3 months, price is showing us momentum to trade to the downside, right? We've got a lower low, we've got a lower low, we've got a lower low, we've got a higher low, we've got a higher low, right? And what's resting below the lower lows? What's resting below the higher lows? There is liquidity, right? So already we have marked out sell side liquidity. Whoever is long on the dollar right now, right? Whoever is long, most of them, they've got their stops below this area here, right? That's where they have their stops. So we got our sell stops. Unfortunately, guys, this video might be a bit long because I want to do this analysis once and for all so that people have got something to follow through in the coming 2 to 3 weeks. And above every higher low, lower high, right? We've got buy side liquidity, right? Buy side liquidity in the form of what? Buy stops, right? So if you're not in the mentorship, you might find this a bit boring and all that, but if you're in the mentorship, you know the significance of this price breakdown. So we've got buy stops here, right? Now once you've done that, you can already see that the market structure is starting to make some sense, meaning market is going to be hunting for what? It's going to be drawn to sell side liquidity. Now if market is going to be drawn to sell side liquidity, what does that mean? It means we are in a sell in a market maker sell model, right? If we're in a market maker sell model, what do we need to look out for? We need to look for price to trade back to premium areas, where we're going to be hunting for what? For short trades. So now I've highlighted my monthly levels that I need to take note of, and also there's another. So this now is now acting as our bullish order block, right? That's our bullish order block. I'm just gonna mark the whole candle for now, and then we need to mark the mean threshold. The mean threshold is coming in at okay, let me grab my fibs. So that's the 50. I need to see the 50% price point. So the mean threshold is coming in at there's my equilibrium here, right? And I'm gonna get rid of this. So I've got my 50% mean threshold of the bullish order block. That's a monthly bullish OB. It's very important that you highlight all these areas, because they're going to help you in the future when you look at price action in relation to the levels that you'd have marked. So we've got our mean threshold. Of course, the wick, that's going to be our rejection block, but for now we're just going to use the whole candle as our reference point. But once price approaches that level, then we need to break it down to taking not just the body of the candle, and then the wick becomes our rejection block. So now what I'm gonna do is I'm gonna drop down to a weekly chart. Of course, now I've already highlighted that market is being drawn to the downside. Now I need to highlight the weekly levels, right? Now on the weekly chart, I hope you can all see clearly, because some people were complaining that my resolution is too deep, but it's the monitor that I'm using. It helps me to look at the chart properly. I've got more details on the chart, so you can see our weekly level. So last week we can see price traded all the way to our monthly high, missed by just a little bit, it didn't break above. Now on the weekly chart, since we are expecting market to be hunting for premium areas for us to go short, we need to be in a position to highlight what's happening in this price action right now. So already we can see we had a market drop down, we traded back to our old high, right? Then we had a new high formed last week. We still have our buy stops above there. Then market rejected to the downside. So we've got this candle here, and in this bullish move, we've got bearish order blocks there on lower time frames, right? We've got a bearish order on the time frame. So since we're expecting market to be drawn to sell stops, sell side liquidity, can you see this gap in here, this imbalance in this price action? It was filled here, right? We've got price imbalance here, then it was filled. It means this level from here, let me just highlight this. So that you know, you see that gap in price, those two bullish candles, there's an imbalance of price between those two candles, and if you see, it was rebalanced, price filled back, then traded away. I'm just highlighting so that I place my So we are talking of this area here. We've got this gap here. Sorry guys, I just need to get this perfect. Yes, it's not gonna be super perfect. The reason why I'm extending further away, because I need to have that price action. You can see the area that I'm talking about, guys. We've got those 2 weekly bullish candles that moved upwards, right? I'm talking about this gap here. You see that gap? That's what we call imbalance, right? So we had this candle opening, traded lower, and then trade to the upside, and then we had this candle trading back again to this area. It means this level here, right, it's going to offer support when price comes back. Already we've seen price doing that from last week, right? It's going to offer support, meaning this area now becomes crucial in our analysis for market to drop to the downside, right? It becomes crucial. So now I'm gonna go on to a daily chart. Now on the daily chart, you can see the support that I was talking about. Price found support in that gap, right? We still have, can you see? There is the gap there, right? Let me just see on which day. You see there's the gap there. Price opened with a gap to the upside. Every time it comes back to that area, price is finding support and rallying to the upside. But now on the daily chart, we've got our bullish order block, right? We've got our bullish order block here, where price is bouncing to the downside. So we've got a range. I defined this in the group, guys. You must know already this was defined in the group. So this imbalance to the downside is crucial, and it's happening at like 50% of our daily consolidation area. We've got a consolidation here, right? And right by the 50% of the range, we are seeing price finding support. If it breaks to the upside, if it breaks to the downside, we might see price finding resistance, right? But right now price is finding support, and then it rallies back, support, and then it rallies back. So this range is crucial in such that the moment we see price breaking above here, this is our monthly high, August monthly high, this is our September high. The moment we see, and here we've got our September low, the moment you see price breaking above, then we know that probably the bulls in the dollar have come back into the market. But as of now, we are looking for price to trade lower, right? We're still expecting more weakness to come into the dollar. So from which level then are you going to be hunting for premium areas? It's this range here, right? Already I've defined the daily bearish order block from these 2 up candles here. These are our 2 up close. This is the last, but the body is too small. There's not much institutional buying there, so you have to combine with the previous big bodied candle. The reason why I did not use this is because it's not the last up candle. This is the last up candle. So this is our daily bearish OB, right? So this is our daily bearish order block, and we've got buy stops above there, right? So we expect market to come into this range and start finding resistance and trade to the downside. So now we go to an H4 chart, right? On the H4 you can clearly see the support I was telling you about in the price imbalance. I managed to benefit quite a lot in this range here. You see, when the dollar was trading into this range, I was only looking for shorting the Euro USD and shorting British pound against also the US dollar. So now we can see price as it is right now. There's no need for you to be involved in the market when it comes to the dollar. You need to wait for price to come back into this range here, 93.40. Once it comes back up there, right, that's when you get interested in what? Shorting the market. You see, it's that simple, guys. You don't need to force yourself to finding moves where there's none. You see, so when price comes back into this range here, which is our daily bearish order block, then we look to trade lower. Or if we trade back up into this up close candle, so this range here, you see, 93.20, our institutional price, 93.20, we could see price finding resistance there. We could see sellers coming back into the market, right? So these are the conditions that you need to be well aware of when you're trading, right? You don't have to go in blindly to say, okay, no, I'm gonna look at the dollar index, what's happening. You see, from where it is now, you can see there is a bit of bulls coming in. That's on a lower time frame, and if you're a scalper, that shouldn't stop you from selling Euro USD here, right? That shouldn't stop you from selling British pound against US dollar, provided that those assets, they are also approaching the critical level. Like right now, if I go to Euro US dollar, right, I've got a short position that I'm holding on Euro US dollar. It's because I expect dollar index to push at least to the upside, right, from that weekly price imbalance candle. Remember this gray shaded area, right? So it means my short on Euro USD was a bit delayed. I was late on this entry, so I'm expecting Euro to trade to the downside because of this range here, right? That should not stop you, because you've got the conditions that is met for you to make that type of a decision. But if you want to be more conservative with your trades, if you want high probability trades, then you need to wait for price to trade back to 93.40, right? Once it reaches that area, then you start hunting for long positions on Euro USD, right? By the time dollar gets to 93.40, probably dollar would have been testing these old highs here, Euro US dollar, to be trading these old highs and also bounce to the upside. So basically that's what I expect the dollar to be doing in the next couple of days, couple of weeks. I'm still expecting September to trade lower, right? Still expect September to trade lower, or even further rise up all the way to 93.30 again. Then from that area, then we need to be hunting for short trades on dollar index. You can see the 93.30, that was from previous month high to current month low. Find a retracement there, it's coming in at 93.30. This way you should be hunting for shorts on dollar index and longs on Euro USD. So you can clearly see price structure is well defined. There's no need to be chasing the market or anything. You see this level here, 93.30, I'd say 93.40 for our conservative traders. 93.40 is gonna offer good chance to take the market to the downside. So you see, things becomes more clear. You just need to be in a position to break down the market structure in a proper way, knowing what you are looking for, what you are hunting for. So now we expect price to be trading back to bearish order blocks on dollar index for it to find resistance and trade lower. And on Euro USD, we're waiting for price to fall back to lower time frame bullish order blocks for us to be hunting for long trades. So yeah, I hope you have understood perfectly when it comes to dollar index, how we are going to be looking out on dollar index. I also have a trade on Euro GBP. It's a long trade. Took the trade in this price area here. Currently we are up 75 pips. Reason why I took this trade is because if you go to a lower time frame, you can see this down close candle here, this big down close candle. My entry is right at like 50% of this down close candle, which acts now as my new demand zone that was created. You can see price massively run it away, and then it balances. There was a liquidity void there, and then price came back into my last down close candle. This is a H4 chart, right at the 50% retracement. This is where I took the long position. I even advised the guys in the group there about this trade, and then you see how price reacted. So yeah, we could see further moves to the upside. I'm expecting price to reach at least 0.92400 on Euro GBP. I expect the euro to gain a bit, and the British pound to take a bit of a hit. So this is the trade that I'm currently holding, Euro GBP long position. So whenever you see price coming back into the 0.910, that area is ideal for long entries to the upside. So yeah, I think that's pretty much about it for this week, guys. And for those who have any questions, you know how to get hold of me. And yes, we also have USD CHF. Not many guys in the group did the assignment, but be that as it may, I will send the charts in the group, and then you see how further you can trade USD CHF. And then Euro CHF, currently price is in a weekly where are we current price is trading in a daily bearish order block, of which I expect it to reach into this up candle here. This is where you should start hunting for your short trades around where are we 1.080. That's gonna offer you good shorting opportunities there. And then regarding USDJPY, I did say price is now back to our April, is it April, August, this area here. So this is where are we April 2018 lows, and price has been finding support there. I'm not sure what really happened here. This must be the trade deal, China and America, this week here. So price is back now onto the 2018 lows. 2018 lows, December 2018, August 2019, and then we've got July 2020. So we just have to wait and see how price reacts. I did share this chart. This is the one I was talking about. How price reacts here next week. A close above 104.50. A close above 104.50, then we could see price trading higher, but a close below 104.50, we could see price trade all the way to these lows in the coming weeks. But remember, this has to be supported by what dollar index is doing. If we do see dollar trading back into 93.40, then expect the yen to trade back into these old lows here, right? Meaning it would have found support here. So yeah, that's pretty much about it, guys, and I do hope you have a great trading week, and I wish you all good luck and happy trading, guys. Thank you.